Dear listeners of The Laundry, welcome back to another episode. In 2022, the FCA, the Financial Conduct Authority in the UK, raised the possibility that criminals may take advantage of the speedy onboarding process of challenger banks, particularly to create money mule networks. In the report, it was also noted that challenger banks advertise the ability to open accounts quickly, which may lead to insufficient information being gathered on higher risk customers during the account opening process. Consequently, the FCA reviewed the financial crime controls of a sample of challenger banks that compete with traditional retail banks. In this episode, we will, together with one of the leading experts in the field, James Nurse from FinTrail, explore the risk associated with challenger banks and how traditional retail banks are faring in comparison. We will also be looking at the financial crime controls among the challenger banks to better understand the situation. Welcome, James.
Thanks so much for having me.
Super interesting topic. I know a lot of our listeners work at traditional banks, so exploring this challenger bank versus traditional bank is an interesting topic. Just to dig right into it. So first, what led to the need for a review of financial crime practices in the challenger banks?
Yeah, sure. So, I mean, in the UK and similar to other kind of areas of the EU and the world, thematic reviews of certain subsegments are reasonably normal. But obviously, as you alluded to, there was general concerns about, bearing in mind the national risk assessment that I think they referred to was published in 2020 before COVID and before, obviously, this lighter touch, as they're describing, or quicker onboarding process became a bit more normality than it is now. So the kind of lighter touch or less intrusive onboarding process was the kind of driver. I think they also saw more suspicious activity reports, or SARS, or suspicious transaction reports, depending on where you're coming from that subsection as well. So there was a few driving factors that I guess made them decide that maybe it needs a little bit of delving deeper into that particular area.
And what were some of the critical weaknesses that they identified in this, or they identified and then gave out in this report?
Yeah, sure. So I guess what I would say is nothing necessarily crazy new than they haven't said before about other areas. So it's, customer risk assessments. So not having a sufficient methodology for customer risk assessments, which is, something that continues to come up all the time. Increase in SARS or lack of quality suspicious activity reports, basic due diligence, but also lack of EDD for high-risk clients, I think was one important one they flagged as well. But one interesting one that was a bit kind of unique to this area is having a sufficient change program in place. So clearly a lot of these kind of organizations they're referring to go through, huge scale growth. And having a change program to manage that growth is an area that they identified that maybe they kind of fell short of.
That's something we need to pick up on later. But what were some of the, for challenger banks, what are some of the worst exploitations you've seen organized criminals have done towards these type of new actors?
So I guess it's not anything that the kind of traditional banks wouldn't be getting abused for in the same path, but I guess fraud continues to be the kind of main pandemic that occurs that we haven't resolved as a society. So being the exit route for fraud, I guess, continues to be one of those main kind of risks that they kind of experience. So with fraud comes, money mules and those kind of areas. So anything from, money mules from a retail perspective, or, the abuse of corporate kind of organizations to move kind of money, again, related to scams and fraud as well.
I've also saw recently here in the Nordics, there was a huge operation in Denmark where the police arrested 200 people related to a money mule network. So yeah, it is a big problem. Let's get to the topic of sanctions. So that is becoming increasingly important. And this review that was conducted in 2021, so before the war in Ukraine. So the focus on sanctions in this report was limited. But how can challenger banks best ensure their customer risk assessment and EDD measures are adopted to the heightened risk of sanction evasions? How do they do that now?
Yeah. Sanctions is an interesting one compared to some other financial crime risks in the sense that it's a bit more yes or no when it comes to controls sometimes, especially at onboarding. So, talking about customer risk assessments, it becomes a bit more um, less useful, I guess I'd say, rather than tricky to incorporate sanctions risks into, customer risk assessments, although clearly some business models are slightly different or have higher risk. So, there needs to be some things to consider if required. On a sanctions risk when it comes to kind of EDD or kind of customer due diligence, clearly that's definitely kind of a unique area that people need to be thinking. So making sure, you're collecting or considering the correct kind of EDD measures to actually kind of determine or discount sanctions in your policies, procedures is really important. So I guess those CRAs not so much, but EDD and CDD certainly.
Mm. Um, we talk about challenger banks now as something separate, but or do they really differ from traditional banks in terms of the legislation they need to comply with and the risk frameworks, etc.? But are there really two different things, or is it just actually the same?
I mean, principally they're the same. I think, like they're required to meet the same kind of AML regulatory obligations, albeit some kind of challenger banks or some kind of come under, I guess, EMI or electronic money institutions or payment institutions rather than a full blown banking license. They may have their own kind of banking partners they report into, so it may not just be the kind of local legislation they need to abide by. They need to kind of meet the standards of their banking partners as well. Generally, the principles are the same, but ultimately, sometimes if you are an EMI or a payment institutions, there's certain kind of less kind of steps that you need to consider, particularly, from a, key stakeholder perspective, having like, a significant kind of senior management involved in terms of registration.
Mm. Do you guys have been working with a lot of challenger banks, new fintechs, etc.? Do you think a lot of founders in that area has been you start out with a great financial application idea and then suddenly you meet the reality of compliance and regulations? What have you seen? Are people prepared for all the work that goes into that, or?
I'd say never. I think no one's ever fully prepared. We've met lots of great founders who really want to do the right thing. But all these organisations as they scale, they become a victim of their own success almost. So no one can really kind of prepare for really uber growth as some of those organisations have seen.
Mm. Are there any specific guidance available to challenger banks to help them meet their AML CFT obligations?
So no more than like anywhere else, I'd say. Clearly the usual kind of places to go to. So the EBA, Wolfsburg Group always publish loads of good guidance. In the UK, we're quite fortunate that we have some, the Joint Money Laundering Steering Group that publish guidance as well. So, but also go to your local kind of authority for those particular guidance bits as well. But we at Fintra, we post lots of guidance, so check out what we do. I'd be wrong of me not to plug us at the same time there, but also peers as well. I think there's lots of communities that you can get kind of best practices in. So we have our own community, the FinTech FinCrime Exchange as well. So reliant on peers continues to be like really important.
Mm. Um, so, when you start a challenger bank, you kind of starts from scratch. You don't have any like technical legacy. You can start with the best tools and you don't have like a huge customer base already, like more traditional banks that already have systems in place, huge portfolios. And when a new regulation come in, you need to like adapt everything to the new regulation. But do you see um, challenger banks making different decisions in how they set up their compliance in terms of IT systems than traditional banks, or do a lot of people fall into the same trap of buying more older systems and, then suddenly are faced with the same legacy and workflow issues as traditional banks?
I think with traditional banks, one thing we have to appreciate is usually there's loads of different areas of the bank. You'll have the lending part, you'll have the retail, you have the corporate, you'll have the investment. So already you've got, all sorts of subsections within the bank, which create complexities that maybe become a little bit tricky to kind of maneuver. Whereas, one benefit of, starting from scratch is, you managing all those things in the kind of the same buckets. Especially when, maybe the retail part of the bank is using a different system to the corporate or investment part of the bank. Whereas, within a kind of a newly established kind of, challenger bank or any fintech organization, trying to manage that all in one, all encompassing control framework is a little bit more beneficial.
So what are some of the, tips when you guys start working with a new fintech? Let's say you start working with a new fintech, they're going to build their compliance program from scratch, and, you can choose, you can start building up that infrastructure. What are some of the top 3 tips that you would give them if they were just starting out?
Yeah, I mean, hiring the right people as early as you can is important, or at least getting an external support if you need that as well. Getting it as right as possible to begin with always helps you later down the line. I think fraud is always a key topic for people to be thinking about, especially. It always is the key risk that people kind of come up from a volume perspective, and also operational, and the ones that are under most scrutiny at the moment. So make sure you're thinking about fraud, I think, is usually one of my kind of top tips as well. But also just I guess, continually monitoring your framework. I think the controls that you implement at day dot are not going to be the ones that you have 1 year on. They're not going to be the same controls that you have 2 years on. So, monitoring that and making sure you're kind of monitoring that on a dynamic, continuous basis is really important, because they're not going to maintain effectiveness as you kind of continue on your journey.
Yeah, and here we come back to the change programs. The report pointed out that was not in place in several of these banks. But can you give a very specific examples of how a program when you start out, and then how that doesn't fit a few years later, and what it should be? What does it, a practical example?
I mean, it could be as simple as resourcing. So, simple. You start with 100 customers per year. Suddenly you're getting 1,000 customers. Clearly, you need to be thinking about what your budget is in order to have, enough analysts to actually kind of resolve the outputs from your CDD, your screening, your kind of transaction monitoring files. That's a simple one. Changing in business models is another of the examples. So, or going into kind of new jurisdictions, or suddenly offering new products. You need to be thinking about what you need to change as part of your financial crime program to manage that. Just suddenly offering a lending product, or offering a card product, or international bank transfers, or moving from Norway and suddenly entering into the French market or the African market or something. Clearly there's different inherent risks that you need to consider, that you need to be adapting to. Your kind of framework that you apply when you first kind of start out needs to change to your business model.
And then in relation to this, let's look out at 2023. And could challenger banks, or can they expect anything from the FCA in terms of monitoring their compliance program with, the upcoming regulations and so forth? Will there be new guidelines or something?
So I guess in terms of what they can expect, there's probably going to be more a kind of, thematic reviews coming out. I know they've got plans of doing specifically fraud deep dives, which is a reasonably new one for them. Other kind of areas are also kind of deep diving into the money challenger bank space as well. I think in Ireland, I think on Friday they actually released another, I guess, Dear CEO letter specifically on that area. A more broader one, but definitely covers AML and financial crime in some kind of degree as well. But specifically in the UK, fraud is going to continue to be top priority. The government here has an agenda in terms of their plan. The House of Lords put out reports, late last year, specifically looking at fraud and the scrutiny of fraud. So that's definitely the area that I would be focusing on alongside other bits as well.
But on a more let's talk more about the positive note, not just the things that they identified that was wrong in this report. The FCA observed a lot of good practices as well among the challenger banks. So what risk controls are the challenger banks usually good at, or maybe even better at than the traditional peers?
Yeah, so I think if I remember rightly, they specifically called out things like good policies and procedures that were up to date. I think a usual thing is, especially we do lots of audits of Fintrail, but you go in, you review a policy, and it hasn't been looked at since 2015 or something, and you ask the question of why it's not been updated. The policies or procedures should be the focal part of your control framework. So they definitely highlighted that having those up to date was something that they saw a best practice perspective there. I think the use of technology, particularly onboarding, was another one as well. So using non-traditional kind of methodologies to identify and verify your client base. So biometric technology and that kind of thing as well. So those are two examples of best practices. And you're right, it's not all bad news. There's some good news in there as well.
Yeah. Definitely. And interesting what you said about, using new technologies for the onboarding process. How, in your opinion, how do you balance the need for a robust KYC onboarding process with, the seamless customer experience process? That's always a tricky one to find the right balance. What's your take on this?
I guess there's probably three areas that I would highlight here. It's having a really effective customer risk assessment. If you really understand your customers and effectively risk rate them, you should be able to apply the proportionate due diligence to that meets them. So in theory, lower risk clients should have a more kind of less intrusive process, and higher risk clients should maybe have a more intrusive process. And then the other point is probably I guess the difference between compliance and risk management. So you can be compliant to the local legislation, but it doesn't necessarily highlight all the risks you need to consider. Again, going back to the fraud point, that's one to highlight. So thinking about what other kind of controls that you can kind of include that aren't necessarily part of, the money laundering regulations in the UK or the Bank Secrecy Act in the US or whatever your equivalent is. And then the final one is, I guess, intrusive versus not intrusive KYC. Not everything has to be a touch point with the customer. There's loads of kind of back end or extra information you can collect from a customer perspective that doesn't need you to actually ask questions for them, and doesn't involve them submitting a proof of address document or extra information. So there's ways in which you can be clever about getting extra information and verifying and understanding your client without actually kind of putting them through unnecessary burden.
Yeah, I agree with that. And we were discussing this over at lunch at Strise today, because we are Strise is a customer of several banks, and one of the banks in which we are a customer, it's more of a traditional one. I got asked to update the KYC information, and here in Norway we have access to a lot of public registers with verified information. And when I looked at this form, they had the most outdated information. And I had to input everything manually. Even we don't have one UBO at Strise, and I couldn't then press no and then not fill out any UBO. So I'm like, are you serious? And then I filled it out. And then I got an email today saying, oh, you guys have had a new change in ownership. Yeah, can you please send in all of this documentation? And I know it's publicly available. And it's such so much friction. And also it's I'm sending it in on an email. How am I ensured that this will be stored correctly? Isn't it better if you guys could just pull it automatically? And yeah, that was not a seamless customer experience at all. In what other, from your experience, what other things have you seen in the KYC process that separates challenger banks and more traditional banks?
I think other than the use of, the technology, and although clearly, I think if you'd asked me this, 2 years ago, it would probably be more. But after COVID, or the word that we're not allowed to use, but there's been a complete increase in similarities of how I guess traditional kind of financial institutions or banks or the operate in very similar manner to I guess the kind of fintech or challenger bank sector as well. So I guess 2 years ago, they were certainly using less natural language processing, less kind of biometric technology, whereas now clearly the banks are very much kind of adopting those as part of their onboarding. Was more kind of high street banks are shutting, so digital onboarding is now actually the new normality. So I actually remember a kind of a day when they used to class remote onboarding as higher risk, whereas now that's not a specific factor. It's just a different kind of way in which you onboard clients. So I think actually less so now, I guess, than previous, although clearly they are quicker adopters of technology usually, because it's an easier to move a smaller kind of nimble organization than a large kind of retail or corporate bank.
Also, looking more into the future, what are some of you've mentioned fraud, what are some of the other, what do you think will be the big compliance trends in 2023?
I mean, effectiveness continues to, I think I said this last year as well, but effectiveness is going to continue to be a huge trend, mainly because we continue to be compliant but not effective. So I think making sure that kind of you may have the controls in place that you think are regulatory compliant, but actually are they effective and working correctly, I think is another thing. So I think I'm going to bang this drum again in January, as I probably did in January 2022, but effectiveness, please. I think I'd like to see that, and I think will be a kind of an area that continues to be a focus.
Yeah, I think so too, because compliance, it's such a fast-growing profession and area, and criminals are always a step ahead. It's much more organized crimes. You can do, financial crime as a service almost now, or these services are available. So I think too, the effectiveness will be important, and also, more automation, so all these people can work on what's the really hard cases, the investigation, like all of that, and then having smarter systems to handle more of the lower risk volume based processes. I see time is running out, but I have a final question, and that is, what is the best thing about working with financial crime prevention?
That is a very good question, and one that I was ill prepared for. I think I would say people don't view financial, other than making a difference. Obviously, I need to say that one first because that is the most important thing. But I actually think it's creativity. People don't actually view compliance, and particularly financial crime compliance, as a creative area of the business. But actually, it's really, really creative, especially when you think about properly thinking about a risk-based approach and how you adopt it, really thinking creatively about how you properly mitigate your risks or meet your regulatory obligations. I think that's the bit I enjoy the most, thinking outside the box, how to stop that crime happening, and I think is the bit I enjoy the most.
That is a very good answer. And I tend to agree. It's actually much more creative than people think. Thank you so much for coming on The Laundry, James. It was super interesting to talk about this topic with you, and hope to have you in another episode in the future.
Thanks so much for having me.